Hey everybody, welcome back to my YouTube channel. I am Neal Cox, Principal Broker of Judah Real Estate Group right here in Louisville, Kentucky. Today I'm joined with Mike Creeden of Pinnacle Mortgage.
Yeah, no, glad to join you guys. I'm a locally owned mortgage broker here in Louisville, Kentucky. I've been doing this for 10 plus years, and like to enjoy helping first-time home buyers and people who have bought homes in the past, get qualified to buy new homes in the future.
Absolutely, and you own Pinnacle Mortgage, correct?
That's correct. Yep.
What advantages does that give you over using Chase because you bank at Chase?
Certainly a good question. So, if you walk into Chase and you ask to get pre-approved for a mortgage, they're going to go over, their products that they have and the rate that they have. The benefit of working with a broker is I work with, 10 of the largest wholesale mortgage companies in the country. That allows me to, shop the rate and products, on the client's behalf, which typically means the client, ultimately is going to save money versus using their local bank.
One reason I like Mike, obviously you can use any lender you like, but Mike's got a lot of flexibility and different programs that your local bank and many other mortgage lenders just don't have.
Yeah, I would say that's definitely true.
Yeah. So we're at the beginning of 2025 here. We got a bunch of snow dumped on us. Kind of stalled my start into the 2025 market really, because nobody was going anywhere for a little bit. But now that we're things are moving, let's talk a little bit about rates, the market, what we're seeing here. I had someone ask me, "Hey, how's the market recently?" And it's such a hard question to answer.
Definitely.
It really is. In 2021 and 2022, the market was so hot, way too hot. The prices shooting up from people competing with each other, mortgage rates that were negative practically. I've got a 3 1/8 on my house right now. Makes it kind of hard to move.
Definitely.
But things are going. I think people are maybe a little more used to the rate environment we're in and a little bit more willing, although most of my transactions I've been doing are people that are moving for a job. They got married, maybe a divorce, it happens, kids, extra rooms, that kind of things. But there's a lot of pent-up demand, so people are saying, okay, this is our rate. We can refinance one day if and when rates ever get much better, which I think they will. Do you think they will?
I think so. I mean, that's the $1 million question, right? Like, if anybody could predict the future, they probably wouldn't be doing what we do for a living.
That's
They'd
right.
probably be on Wall Street. But from the experts that I do follow, they do anticipate rates to drop. Whether that's going to be 2 weeks from now or 2 years from now, it's hard to say.
Mm-hmm.
One thing that I advise clients is that, there's a number of clients that have said to me, we're going to hold off until rates decrease until we buy. I don't necessarily think that's the right way to go about it. Reason being is we just don't know when that's going to be.
Right.
And so let's just say hypothetically it takes 2 years for interest rates to decrease. That same house that you were looking at for $200,000 today might be $230,000  2 years from now.
That's right.
So with that being said, if you were to, if you're out in the, market and you're looking to purchase a house now, my advice would be to purchase that $200,000, home now. At the current rates, 2 years from now, if rates, decrease at that point in time, you can refinance.
Mm-hmm.
That would be a better financial strategy as compared to, waiting to buy.
Yeah.
With that being said, you still have to be comfortable with the payments, with the current interest rates. I'm not saying that, you should, 100%, count on your payment decreasing. You want to be comfortable. But, I just wouldn't let interest rates be the only reason that you hold off from purchasing.
Yeah, I like that. There's an old adage in real estate, the best time to buy a house is 5 years ago, the second best time is now. During that hot market that we had a few short years ago, appreciation of prices is just astronomical. I know folks now, the one that I'm about to list his house, he bought it in 2021. And I was like, oh, let's see. So we're nearly 4 years from when he bought it. And when I looked at the appreciation, I was shocked. he's going to make some cash on that.
For sure. Yeah. I mean, I wish I held on to every single home that I ever owned.
Yeah.
You look at what those homes, sell for that you might have sold personally 10 years ago, and it's mind blowing.
Right.
So I definitely agree with the adage that, if you can afford to buy a house, now's the best time.
Absolutely. Such a great wealth building strategy. And you got to live somewhere, right?
Yeah, no, definitely.
Yeah.
Kind of going back to what you were talking about with interest rates and what they expect. I know there's a lot of confusion sometimes with consumers kind of reading the headlines that they put out on the internet, and they can be misleading. So the Federal Reserve they meet typically every month, and they make a decision. I don't know if it's 5 or 6 times a year in terms of whether or not they're going to keep rates the same or decrease rates. Those rates don't necessarily have a direct impact on mortgage rates. So they're talking about the federal fund rates, which is basically the overnight lending rate for banks. So if a bank needs to borrow money, in the short term for federal regulations for banking, they can borrow that money from the federal government at a set rate. So those are the rates that you're reading about when you see that the Fed meets and they increase or decrease rates. So last month in December, the Fed came out and they actually cut interest rates by 0.25%. Well, they actually came out and also said that they now only expect to cut Fed fund rates 1 or 2 times in 2025. 3 months prior to that, in September, they were actually counting on cutting rates maybe 4 or 5 times in 2025. So even though the Fed cut rates in December, mortgage rates actually increased. So again, I know it's a little confusing, and I've got plenty of phone calls asking if mortgage rates dropped once the Fed actually dropped rates themselves. But because of their projections for 2025, rates actually went up.
That was one of the reasons I wanted a lender partner here to kind of explain some of that stuff. I saw a great meme this week that said, "Oh, great, the Fed cut rates. I can refinance from 6.5 to 7 now." It's like,
yes,
it's misleading. Not everybody. Many people think, "Oh, the Fed dropped interest rates. Time to go buy a house with our new fresh rate." But what is that rate tied more closely to?
So mortgage rates are really directly tied to mortgage bonds, which are traded on the stock market. So typically, the traders of these mortgage bonds or giant corporations or giant hedge funds, and they pretty much already know what the Fed is going to do in advance. So typically mortgage rates don't necessarily trade in a volatile way the day that the Fed decreases rates, because they're already expecting that. Usually they trade based upon the comments that the Fed makes once they have once they cut rates, and they kind of project out into the future.
Right. I have seen those. It's like the scatter plot thing or whatever, where each member of the Fed plots what they think the rate is going to be is it a 12-month cycle or maybe even longer?
No, they go longer.
Okay.
I think they have a 1 year projection, 2 year projection, and then like a long-term projection. Don't quote me directly on that, but there are different time frames that they kind of basically every voting member of the Federal Reserve kind of has their own prediction as far as what they think the Fed funds rate is going to do in the future. And so that's why we saw mortgage rates go up in December, is because that graph for the voting members of the Fed were predicting that they were going to cut rates a less amount of times as compared to the previous time they did that graph, which was in September.
The inflation has proved to be more stubborn than they expected, I guess.
Yeah, so I mean, really, what kind of drives the decision of the Federal Reserve is number one, inflation, and then number two, the jobs market, and so things can change quickly based upon one inflation report or one jobs report, but inflation has definitely come down. I think there was an inflation report that came out this week, and we're in the low 3% range.
That's good
for
news,
inflation.
Which is actually close to where they want to be, I think.
Yeah, so their long-term goal is 2%.
Yeah.
So we've definitely made progress. I think at the height it was around 7%. Again, don't quote me; could be close
Yeah.
to that range. But, we're in the low 3% range. Definitely made progress,
I
just
think
not quite where the Fed wants to be.
there were sectors that were way high,
Oh, yeah.
100, 200%, that kind of thing.
For sure. When you break down the different sectors,
Yeah.
of course, there's, food, for example. I'm sure, people hear 7% inflation. They're like, that I feel like food went up more than that. And it probably
Yeah.
did. I'm talking about, the overall general
Yeah.
economy.
My wife and I went on a cross-country trip, not cross-country, a very long trip in 2022 in my big truck I had at the time and our camper, and gas was like $5.50 a gallon. I mean, it was expensive. That was crazy. I drive a Tesla now, there, so I don't really even pay attention to gas prices that much anymore. It's kind of nice.
Yeah, for sure.
And the market, I have seen everything here lately. I had a listing that we're actually closing on today. Woohoo!
Awesome.
But it took 2 months to get a contract on that. And this was a 3-bed, 2-bath house in Mount Washington, which is in Bullitt County, just south of Louisville. It's almost like a Louisville suburb, where more of Bullitt County is not that way. That house 4 years ago, would have sold literally on the day that I put it on the market. And it took 2 months this time. Contrast that, though, there was a good rehab kind of property that somebody wanted to put an offer on at the end of the year, right there in December. And I call the agent. She says, "You better be quick. We've got 3 other offers we're sitting on." And so that was multiple offers right there. So is it fast? Is it slow? Yes.
Yeah, I think it's just really property dependent at this point.
I think it is. The really good properties, you're still going to find some competition out in the market for that. The way to get out of this, in my opinion, is builders need to keep building. We need more units, and that will allow other people to sell their houses to people to move up to these new units. It's really...
No, I would definitely agree with that. I think part of the shortage right now is the fact that there's so many homeowners, like you mentioned, that with your interest rate currently in the 2% range, it's hard for you to justify moving into a new home and taking on a new mortgage just based upon where rates are at right now. So I think that's creating some of the shortage in the market.
Yeah.
And so I agree that some of the builders, building more homes is going to help with the supply.
I've been told that the older generation, I guess they're the boomers right now, are more commonly kind of aging in their home rather than going to the home or whatever, the nursing home or whatever, that kind of thing. And so I guess as that generation kind of turns over, it's morbid, but it's the truth, there will be some more housing stock freed up that way as well. That's what we're hoping for.
Yeah, no, we can only hope, but I would agree with that for sure.
Yeah. So, if I were to I'll give kind of my real estate prediction. You could give your mortgage lending prediction for the year of 2025. If you're moving here from an out-of-state place, a lot of time I help a lot of people with job changes. You're going to have to move anyway. I think that you will find houses that have higher days on market that are still some of the really great houses to find. I recently helped somebody moving from Texas that we were thinking it was going to be a competitive, and then it ended up not being competitive. So you can kind of slide in on some of these, but I think there will be pockets. But I think it will be, for buying, it will be easier than the past few years that we've seen when it's been so crazy.
I certainly hope that's the case. On the mortgage side, again, very difficult to predict. Just to kind of give some reference, interest rates really are dependent upon, the person's, credit score, the loan product. There's the property state, the loan amounts. There's a lot of different factors that go into the exact interest rate. But just to kind of give you some, reference in terms of, a 30-year fixed conventional loan with a borrower with perfect credit, you're probably in the low 7% range right now. I would say my prediction is we probably, get back down to the low 6% range at some point. Whether or not we're going to stay at that level for the entire year, again, really hard to say.
Right.
But For the last couple of years, there's been a lot of experts stating that we're going to be in the low fives, maybe high 4% range. We haven't seen that. I really don't expect to see that this year either. I would love to. I just don't know if that's reality. I would say, being more realistic, I would say, low 6% range.
Yeah, and in my opinion, low 6, most people can stomach that. In my experience, once you get to about 5.5, people are like, I'm in.
Yeah.
So I think it would kind of we'll be towing that line maybe throughout maybe in the next few years, where you've got some reluctant buyers, you've got some buyers that say, this is what it is. But like Mike had said earlier, don't make your purchasing power just on interest rate. You're leaving a lot of money on the table that way.
Agreed. And another thing to hit on that is, I read somewhere that, for every 1% in interest rate that we have, every 1% decrease in interest rate, there's an extra 2 to 3 million people that enter into the market as buyers. And so that just means there's more competition, right? So, if you're one of those people that are thinking, hey, let's wait until interest rates decrease, will your payment be lower? Maybe, maybe not, because again, that same house is not only going to be more expensive because of the time that's elapsed, between now and when rates do decrease, but there's going to be a lot more buyers that enter the market, once rates do decrease, which is going to mean there's going to be more offers on the same house, which is going to effectively drive up the price.
Right. Well, and something that's obviously not the focus of this video, price your insurance out too. Shop that. It can be huge differences between companies for homeowners insurance.
Yeah, no, definitely. I've seen some companies be double what another company is.
Yeah.
So I always recommend, you get at least 2 or 3 different quotes.
Yep. And I have some folks, Mike's have some folks we could send you to as well.
Yeah, no, definitely.
That's awesome. Well, thank you guys for watching this. I hope it has been helpful for you all. If you enjoy the videos here on my channel, go ahead and give it a like, maybe even subscribe. But if you are one of those folks that's really thinking about making a move to Louisville here soon, reach out. You can call, you can text, you can email, or there's a sound right here. Sound the bugle, because we're going to be off to the races to make your move to Louisville a smooth one. For Mike Creeden and Neal Cox right here in Louisville, have a good one.
Thank you.